Hello, thank you for coming today. We are talking about AI and insurance. Mike Piehl is going to be discussing that with us today. So thank you so much for being here. Just a quick hello to everybody as you're coming in. You're welcome to be as interactive as possible today, Monica, and I love it when people are interactive. And we just first want to say thank you. Thank you to the community for being here and for taking time out of your day on Friday. As at this point, it's summer Fridays, I think, for a lot of people who are either taking a half day or a full day on Fridays because they've got kids and all those kinds of things out and about. So we really appreciate you being here. And, you know, the whole reason that Monica and I have put this group together and work this group is for you to be able to know and understand latest and greatest and best things that you can do and take back in Salesforce for your insurance community. So thank you so much for being here. And again, let's see together again as we are kind of going through the presentations today. We love to be interactive. I'm speaking for Mike when I say that I'm going to allow you all to interrupt him. If you have questions or comments, this has been AI specifically has been a very hot topic over the course of the last few months, and especially in the insurance space and making sure that you're compliant and regulatory and you've got all of your data right in order to get the right things together. So can't wait to dive into this a little bit more and have Mike share his insights and thoughts of how he's tackling the problem with some of his clients. Cool. Well, with that, Mike, I'll stop sharing if you want to kind of share your screen and we can go ahead and kick off and get started.
I shall. Okay. Give me a second as I work with my tech. Okay, good enough. We're going to dive in. So by way of introduction, Mike Piehl, I've been in the insurance industry in one way, shape, or form for almost 25 years now. A good portion of that was as a client. I had a couple of Salesforce orgs that in my patch when I was at Allianz Life for a few years and made the transition into consulting. I've been doing this for about the last 14 or 15 years, always with a heavy client mix back in insurance. Absolutely agree with everything that Danielle said. Thank you for attending. I always believe that even though I have a deck, and this is going to look like it's more like of a webinar style presentation, please interrupt. The value really comes here when we have a dialogue, not a monologue. And so, you know, if there are questions, comments, you know, raise your hand, you know, throw something in the chat window, or just cut me off and we'll go through it. Okay, with that, let's dive in. We're gonna do some abbreviated introductions. I like to have an understanding of kind of who's in the room so that we can tailor that conversation a little bit so that I'm not using, say, all P&C examples if everybody is from, say, life and annuity, that sort of thing. We're gonna talk a little bit about what is AI to make sure we all have kind of a similar baseline understanding of the content that we're gonna talk about. Why are we excited about it? What do we think it can do for the industry? What sort of value are we starting to see that's already starting to provide? We're going to go through some considerations and risks. This is a different type of tech, and it does have its own set of things that we need to be concerned about. And we're going to talk about some practical use cases in AI specifically for insurance, and then some recommendations. What we're not going to talk about today is like any sort of in-depth Salesforce product on AI. The Salesforce team can do that. They're wonderful at it. Anytime anybody else tries to do it, quite frankly, they fall short. So we're not going to go there today. We're going to talk about industry use cases and hopefully be able to give you guys some areas to take back your organizations for ways to start to explore and turn things on. If anybody has any specific questions they really want to get answered, please feel free to add those into the comment window now. I'll read through those, and again, I'll adjust the talk track to try to make sure we get to as many of those as we can throughout the rest of the discussion.
Mike, I'll also be monitoring that chat for you. So.
Okay, thank you. Okay, with that, let's dive in. I think we have, what, about 30? Yeah, 30 people now. So we're going to go through from an abbreviated introduction perspective. This is going to pop up with a set of questions, and I'll kind of walk us through. Get out, if you can, in Zoom, you know, go to the little emoji window, and if you feel like you identify with one of these items as we go through it, just push the thumbs up. This is a little bit like a raising of the hand way to understand kind of who's in the room. But the first one, when you think about your employer, do you identify more as a carrier or a distributor? We'll do carrier first. Can you just a list of thumbs ups?
1, 2, 3, 4.
Okay.
4.
And what about on the distributor side?
I'm not seeing any over there.
Okay.
Oh, I got one.
Got one? All right.
Yep.
Okay. The next topic, so you think about distribution model, non-captive, captive, or direct. So how you're selling your products. Non-captive would be independent agency or broker models. Again, let's start with non-captive. Again, thumbs up if you identify there.
Got 1, a 2, a 3.
Okay.
4.
Let's switch 4.
Mhm.
And this is like a hand grenades exercise. So it's fine. What about captive? How many people identify with captive as how they're selling their products? And if you work for an organization that sells through multiple channels, feel free to vote more than once.
1. I've got 1.
Okay.
Let's count
Direct.
guys. I don't see any
Anybody on the
direct.
direct? No. Okay.
1.
1. Okay. And then from a job function perspective, are you more in sales, service, IT, some other area of the organization? Consulting would go into the other category. But let's start with sales. Anybody who here identifies as sales, distribution, marketing, anything on that side?
1. Just 1.
Okay.
2.
Service? 2.
1, 2, 3.
Okay. And other?
1, 2, 3, 4, 5, 6, 7, 7.
Okay. 2 more.
As well.
Okay. From a product line perspective, P&C?
1, 2.
Couple. Annuity, life and annuity? Okay.
I think 2, 3.
Okay.
3.
Specialty, health?
1.
Definitely wasn't planning on working.
1.
Okay. And the last one that's here, commercial versus personal lines.
Commercial, I got a 1. 2.
And two on commercial.
3.
Personal
4.
lines.
No, 4 commercial.
Okay.
And then personal. I don't have any personals.
Okay. So I want to, again, thank you for humoring me. One of the things that Salesforce does with these community events is that they don't share the RSVP list. So again, this will help me, tailor the conversation a little bit, but this is, for the most part, we've got a pretty good mix. There's not a lot of spots where there's like a spike in one area or the other. So thank you. Diving in, what is AI and why are we excited? So this slide, as we think about this, right? We have technology providers. Salesforce is one of them. With most of the capabilities that they've added to the AI space over the years has been underneath the Einstein label, which is why we've got that listed out. And most of the content that is provided is really technical, new tools, new capabilities. But there are more tools that exist in the toolkit as opposed to business capability uplift ideas. And so as we think about how do we take those along with what our clients are doing when they say, how do we compete in the marketplace? What are the capabilities we're trying to improve so we can better compete, better serve, better sell, whatever their objectives are. We feel that when we combine those, we get to what we see as transformational value. So when we do this next build, you'll see this pop up with a series of questions that I'm not going to read through now. They're going to show up later in the deck. But these are the sorts of questions that we're starting to have clients ask about and things where we can serve And in some cases, some of these questions we've been able to answer in the past, but it's taken a large amount of effort and time in order to drive through and get to the response. Where now we can look at it in some cases, do it in real time, where we can identify and answer questions that we just haven't been able to do before. So again, we're gonna go through this in more detail in a little bit, but something like in the non-captive distribution channel, which I think we had a few more in that category versus captive or direct. Like, can we clone our distributors, our best distributors? How do we identify who they are? Is it only quoting, or are we also going to look at other data and metrics like profitability, right? And so those are things that we can start to do with a lot more capability as we move forward now in the AI space. What is AI? So I asked ChatGPT, because that's a thing, right? And asked it, what are you? And here's the response that came back. I'll let you take a look at it. It's not a bad response. We're going to rebrand a couple of the categories that are here, specifically when it gets into the technologies that are there. But again, what it is articulating is that AI is a pretty big set of capabilities. There's different technologies that sit underneath it. Oftentimes, as we sit through talking with our clients and our prospects and in boardrooms, we're hearing things like AI will do everything. And so it's important for us, especially as we go through this type of discussion, to at least subdivide it a little bit so we're all operating from the same vernacular as we're moving through the discussion. The other piece that's important here is the end of this response. There are different ethical and societal concerns when we look at AI, and that also applies to us in the insurance space. If we start getting into things like misrepresenting product or controlling who can have access to product, based on the system fully automating, not if-then statements, but basically like a hallucination in the underwriting process, that has an impact, right? And so it does require us, as we think about where are we turning AI on and from places like what's the impact. We'll talk about some of those today as well. But for the purposes of this discussion, we subdivide this into 4 areas, AI domains: natural language processing, predictive. From maturity curve perspective, these 4 are also not on the same spot of the maturity curve. We'll touch on that as well. And then on the generative side, we've split text versus image and video, primarily because in the insurance space, we're going to see a lot more use cases for text than we will for video and audio at this point in time. Can we do generative things around video, audio, image? We certainly can. But it's going to have be much more focused for specific types of organizations, marketing use cases, those sorts of things, not across all of insurance, top to bottom, all product lines, so on and so forth. So those are the 4 that we're going to touch on here. Going into the next slide, going a half level deeper, we think about natural language processing. This actually has been out for a long time. So we've got this in a mature category. In our personal lives, we've dealt with this for years. Alexa, Siri, hopefully nobody's phone just beeped, but like those have been out in the consumer space for a long time. We've got examples like closed captioning. Most TV closed captioning right now uses some form of natural language processing in order to create the text. On the Salesforce side, Service Cloud Voice has got transcription and sentiment, and that's again been out for a while. It's been not in the last 12 months. That product's been out there for a couple of years. As we go into the next category, predictive, again, mature. This really, the underlying structure of this has got more to do with advanced statistics. In insurance, a lot of what happens underneath the covers is like actuaries on steroids. So, we have, this is largely based off of regression models and analysis and those sorts of things, which our actuarial colleagues will use in order to price and determine risk. From a probability perspective, the difference here is that the systems that are in AI can run a tremendous amount of models and identify additional variables that we might not otherwise look at. Years ago, as a client, we were selling life and annuity products at this employer, and you think about the sorts of things we think about for pricing, mortuary tables, life expectancy, that sort of thing on the life side. I remember walking into the lobby, talking to the CFO and one of the guys that do hedging, and the conversation they were having went something like this. The Canadian exchange rate moved by 3 basis points to the U.S. currency. We had a silver mine in Argentina that collapsed, and there was some third thing that was completely disconnected in Asia Pacific, and they high-fived and said, "We just made $100 million." Like that sort of, they're way in the weeds. It's what they do. Both of them had way too many IQ points, to interact with normal humans. But the system, when we start turning these things on, can identify what seem like disconnected variables. But predictive is a different type of structure and mathematically than generative, which is the next two areas. The generative side right now, we're framing both of these up as emerging. I'll just do both builds. These are both under the covers based off of neural networks. Neural networks, we're going to go through some, what that is with a little bit more detail. I promise you we're not going to spend 45 minutes going through advanced math, so you don't have to worry about that today. But as we think about neural networks, ChatGPT 12 months ago didn't exist. We weren't talking about it at all, and now it's out there. There are, from Salesforce perspective, we do have Salesforce GPT. There's some Copilot capabilities that they've recently introduced. We are seeing generative pop up across the Salesforce space as well. And voice, image, video, there's a list of examples there. A lot of these capabilities are in the press quite a bit because when they start to have challenges, they're very visible. So I think the most recent one in the lower right-hand corner was OpenAI. That's the company that also makes ChatGPT. The parent company, they had a spinoff called Sky. They were in the news 2 weeks ago for allegedly emulating Scarlett Johansson's voice without her permission. And so there is, again, as we start thinking about some of these capabilities, there are risks that don't exist with a legacy technology capability perspective. Okay, but throughout the rest of the presentation, we're going to spend more time looking at natural language processing, predictive and generative, and applying those capabilities in the insurance domains. All right, I have the chat window up. I'm not seeing any comments. So if you're holding on to anything or you have burning questions, please, again, feel free to interject. Maturity curve. Why are we talking about stock market prices on this call? The big piece, if you look at the gap between NVIDIA and everybody else, which are the major indices, what this really tells us is that the investor excitement about AI is real, but the only place they feel confident enough to put money in is in NVIDIA. When we have mass market use cases that get turned on, we will start to see other organizations match or mirror this type of an inflection point that happened with NVIDIA back in about December 22. Put another way, with a little bit of more humor, I don't know if anybody's seen this on LinkedIn in the last couple of weeks, but if everybody's digging for gold, sell the shovels, right? So this is kind of what's going on in that last curve. A lot of excitement. Everybody's trying to get AI interwoven through their platforms, specific for industry use cases and client value. And right now, the people that are really benefiting in the stock market prices is the chip manufacturers. This, again, just reflects where we are in kind of the maturity curve. From a consideration and risk perspective, I did ask this question earlier. Do we have anybody here that deals with international insurance at all? Okay. I kind of assume not. We'll run through this pretty. There are a couple. Okay.
Yeah.
Okay. Thank you. I can't see everybody's pictures.
You're good. I have to scroll through everything. You're good.
Okay. Okay. So one of the things that's interesting on the natural language processing side is the underlying language, the complexity and context that matters in the spoken or written language that's being used impacts AI's ability for natural language processing. So when you start to subdivide it, you look at the most spoken languages in the world, you get a graphic like this. But if you think about the underlying complexity of the language, they're very different. Of this list of the major spoken language, English is the simplest language. We don't have, when you think about our nouns, if you've taken any other language, especially out of the European countries, like nouns have gender. English is the only Western language that doesn't have that. So it simplifies the context, makes it easier for the computer to understand the language. As we go to the Eastern languages and we start looking at alphabets that are character-based, They don't have roughly 26 characters, they have many more. And so the complexity and the context of how they're being used in conjunction with each other changes the meaning. Okay, so why am I bringing it up? Because as we move forward, sorry, the other side is inside of natural language processing, which languages have been programmed the most. So you can see that list. The reason why Chinese is number 2, considering the complexity in the language, is because of the number of people that speak it and the investment that's going into it. But it is a big lift to get Mandarin into the AI engines. But the reason why I'm bringing this up is if we start thinking about global insurance and we do something like on our website have an AI-based chatbot, and somebody exists and say, I'm going to pick languages that English that is heavily spoken and is heavily inside of the natural language processing engines, and say something like Hindi. A lot of people speak it, but it isn't prevalent in the natural language processing space. You may end up with that chatbot not behaving the same between the two geographies. So something to think about. This doesn't impact a lot of people from a US carrier or distributor perspective, but if it is something that's relevant, just know that this is something that needs to be thought about. The next one, predictive correlation versus causation and lack of data. You're going to hear over and over again, anything with AI, data. Because if the data doesn't exist, the predictive engines and whatnot can't give good outcomes. The more data, the different types of data that you can connect, the richer the value is going to be. But on the causation correlation side, right? So this goes into, again, that statistical modeling domain. Correlation are two things happen at the same time. Causation is one thing happens that actually drives an outcome. The AI engines on the predictive side are good at identifying correlated activities. They're not very good at identifying causation. So a good example of this, let's say you have an auto policy that expires after 12 months. The system, if you turn on any of these predictive engines, the first thing that they'll tell you is the number one risk to or driver of policy attrition is when the policy age gets to be 12 months, right? That, is that a thing? It is. Is it useful? Is it wisdom? No, it's not, right? So, by working with these engines, you can go in, get something like that that's pretty basic, turn it off, tell it like, we understand, but this isn't of interest, and it will start to surface other things that might be much more valuable to the business. Again, another little example of correlation and causation. Paul the octopus, if anybody's familiar with this one, he's got what they end up doing is they take sports teams, put them in the tank, and the octopus will float over to one or the other. Typically, this happens before a major sporting event, and he's got something like an 87% win rate going back over like a decade or a decade and a half, right? Really good somehow, right? These events are correlated, but nobody actually believes that the octopus floating towards one helmet versus the other actually changes the outcome of the Super Bowl, right? So this is like the AI engines. They can go through and identify correlated events like the octopus in the winner of the Super Bowl or the World Cup or whatever the major sporting event is, but it's not necessarily going to be able to tell you, identify causated events. Okay? So risk here is that if we just turn on predictive and just let it run without any boundaries, we'll end up with incorrect recommendations, decisions. If we put fully automated AI-based underwriting for access to financial products, that will eventually run into regulatory problems. The Europeans have already said you can't do that. Effectively, it's redlining, except not by a person with a marker, but by a system. You can, to be clear, you can fully automate underwriting using if-then statements, right? If you want to sell auto insurance in, say, every state except for Florida, or property insurance, you can do that. Many carriers do that. Many distributors do that. But if you want to let the system determine where you should or should not sell, eventually the regulatory bodies are raise their hand. I think Colorado, maybe 2 months ago, also passed some regulation similar, restricting what you can and can't do with AI in fins. So this is coming. The U.S. is a little bit behind the Europeans when it comes to AI regulation. Okay. For the neural net perspective, again, this is all the things on generative. My assessment of how the neural networks work, right? We hear about training, we hear about things that are undertrained, the mistrained, which is really where the hallucinations come from, and overtrained. So we're talking about kind of all three of these. If it's undertrained, we'll end up with low values coming out of the engine. I've got a client now that called us and said, "Hey, we tried to turn on an AI engine, generative. My husband has a PhD in AI, so we thought we had it, and we've got problems." We said, "Okay, great. Show us what's going on." And they're pushing the button that says summarize, and when they do that, it's coming out with counts. That's it, just counts. So when you're looking at a contact, they'll say you've had 5 activities, not of what time frame, not what type of activities, but that's an example of an undertrained AI engine. It's kicking out information, but quite frankly, that information's also in like 4 other places on the screen, so it's of low value. If we train it, we give it proper training and say, well, we care about things where you're calling about a claim versus a new sales activity versus something like an address change, like then you start to get value out of the summation activities. Mistrained, this we can get from the initial training by the developers is maybe off. This has been in the news as well, where again, because the neural nets are really more of a popularity contest, if you train it based on reinforcement, it learns. It doesn't really have the ability to have like, there's a book of law over there that we need to make sure always exists, like gravity, right? So if you go through and tell an AI engine that gravity means that things fall if you're on Earth, and enough people tell it no, then gravity means it goes up into the sky, eventually, if it's only a neural net, it will invert and say that it goes the other direction, right? It doesn't really have the ability to say that this is fact. And that's going to be really relevant when we talk about some of the things that AI should or should not be used for where it exists today. And then the last piece is overtrained or entrenchment. So if we start thinking about something like, can we use AI to look at our operational process, where the workflow is going, and then turn off all the if-then logic and just have the AI engine route all the workflow in the same places. And you do that for, say, 10 years. Now you want to change your SOP. If it's got 10 years worth of reinforcement around how your workflow is supposed to, for a given case type, is supposed to be processed, chances are to get it to change is going to be really, really difficult. It's over entrenched. From the hallucination side, the mistraining is actually a little more prevalent in the media. So here we've got a list of 4 scenarios where we had public-facing, consumer-side hallucinations in AI capabilities. Depending on your sense of humor, some are more funny if you read the actual posts and things that came out of it than others. But regardless, as we think about on the insurance side, not in the consumer domain, this is an example as well. I went to ChatGPT and said, give me an example of a hallucinated response. And this is what came out, right? Can you tell me about this lawsuit? And if you look at the AI chatbot response, that looks legit if you're not in law, right? So having a generative engine, kind of go crazy and kick out stuff that looks correct but isn't, has the potential for incorrect content to be generated, put in our policy documents, potentially result in recommendations going back and being provided for product selection that's not correct. That absolutely, we have all sorts of things like email surveillance and things that happen now in the industry. If we were to send out or start talking about a product in a way that it doesn't actually operate, or we misstate in the policy documents what the product how it will function, all of that has been areas where organizations have been fined and audited for years. So we want to make sure this is another spot where we can use the system to generate things, but we want to make sure that it's being done in a safe manner. Okay, that is the end of kind of the what is AI and the 4 use case sections, the maturity curves, some of the legal and regulatory risks we've covered. Next, I want to go into practical use cases. So some of these will be more readily available based on your data, and some might take more effort in order to get there. We've gone through, and again, from a business capability perspective, this is a select group of capabilities. If you think about the larger bars, those almost look like, in this case, distributor, policyholder, and employee. Those almost come across like life cycles. The capabilities that sit underneath kind of line up to those. If we were talking about your organization, we would go in and say, which of these do you want to impact first? Because you might want to, your executives might be looking at your business and say, gosh, really good on the distributor side and the employee side. We really want to go after, say, how we do claims process. Okay, so we can go and talk about that. So this is a sub selection of what we would see inside of insurance. The areas that are darker in each of those each of the three sections are the ones where we're going to see examples coming up over the next 3 or 4 slides. Okay. The broader point here, though, is as we think about AI and where it can impact the business capabilities, had we had enough time, we could have shaded all of these dark. It's got value potential for pretty much every business capability in an insurance organization. Okay, again, as I mentioned at the beginning, we think about AI's promise in insurance by allowing us to ask questions we haven't been able to ask before, or at least not, or answer well. So in this case, we've got, can we clone our best distributors? Can we predict profitability, not at the policy level, but back to the distributor level? And can we assess distributor risk? The last one, just give me another kind of personal story here. Shortly after I went into consulting, I was back in the boardroom of one of my former employers. It was Q3. The person that ran the life insurance product line, which is about $100 million a year product line, non-captive distribution, the top 10 to 25 producers accounted for like 80 or 90% of the sales. I leaned over to the person next to him who ran one of the other business lines and said, I just found out that my top 10 producers haven't given us a single quote all year. Huge impact. All of those distributors attrited. They took their business elsewhere, but he didn't know until Q3. And so being able to look at, when can you identify that? At the end of the day, by that point, he was on track for his revenue target, his sales targets. But had he been able to retain those 10 people, he would have had a large growth curve, not just being like, I'm up 5% or whatever the target metric was. So that's where some of these questions have a large amount of value. Again, I should have paused before I dove into distribution management. Again, any questions, AI, risks, concerns, anything at that level before I go into the next slide where we start into tactics?
I don't see any hands at this time.
Okay, so back into the distribution management domain, we start thinking about AI tactics, right? So those 3 questions, and certainly if we sit down and do an ideation setting, there are other questions that will pop up in distribution management. This is just a subset. We can leverage internal data to score distributors. We can enrich with license appointment data, NIPR, production metrics to identify new distributors like your quote unquote best. So as we think about the data that exists inside of a insurance organization, we have silos all over the place, right? Typically, we have the actual policy data is sitting in one or multiple admin systems, agency management systems. The sales pipeline might be somewhere else. The renewal pipeline might be in a third place. Most organizations still pull the renewal pipeline out of the admin system. Quoting information, oftentimes the quoting engines are also disconnected. Any sort of marketing data, that's separate, like who's hovering or interacting with my website. That exists, it's tracked, but most frequently that's in a separate marketing database. And profitability numbers are calculated, but more at the policy level, not necessarily aggregated back up to the distributor. And so knowing that that's kind of what the data structure looks like, and answering some of these questions the way that the tactics side list become really hard unless the data is brought closer together. So in this case, as we would think about like how would you move into answering these sorts of questions, we would suggest go through and score value for each of those data sets and then start to move them closer. You don't need to go through and merge all the data out of the gate. Some of the data, like the NIPR data, there actually is an app exchange partner now that will provide that into Salesforce. So the accessibility of the NIPR data is substantially easier now than it was, say, 24 or 36 months ago, because there. We can use the next tactic. We can use both sales indicators, right? With quotes, what's going, where are things in underwriting, how many things have gotten issued per distributor, and underwriting profit predictions to determine who are the most profitable distributors. Again, years ago, we had a conversation around segmenting out our agents and advisors into different categories and tiers. We found that because we had those data silos and we could see quote activity, we had a set of distributors that were very active in selling. They also happened to sell the least profitable policies in the entire book out of a $14 billion a year insurance organization. And so that once we identified that, which was not something that was automated, a system didn't say, here's an insight you might want to do something about. That exercise took almost 6 months of a team of people digging through the data to come up with. Granted, this is 15 years ago, but still, it was a large amount of effort. And that turned into a whole set of discussions around, should we change how we are segmenting these people? Should we train them that some types of coverages are more profitable and reward them for selling those coverages instead of others? Should we actually be working them out of our distribution mix, right? Those questions were all things that without seeing the data, you'd never be able to get to and had material impact on the overall business. So again, being able to roll profitability back up to the distribution, there's a bunch of good conversations that the business leaders can get from visibility to that data. The last bullet on the predictive side is kind of interesting because the appointment information is public. So if you have access to the NIPR data, you can see in non-captive distribution. Captive, you should be able to see that anyway, and direct is a different story, but non-captive, you should be able to see for a given distributor who else they're appointed with and for what product. And so if you sell, say, auto insurance and you non-captive, and you can see that one of your distributors agents is also appointed with 3 of your competitors for auto, and their sales production goes up, down, sideways, that tells you potentially where the business might be going. And if they're a large producer, it may make sense for your relationship manager, regional manager, wholesaler, depending on your titling, to go out and have a conversation about why your product in auto is better than those other specific 3 products. So having that information can really tailor the conversation that happens when you think about how to manage your distribution network. On the generative side, once you have the predictions, you can go through and start to think about how can we generate content to affect the outcome. So again, like in that scenario, you might be able to go into the generative engine and say, can you give me the top 5 reasons why my product's better than the other 3? Use that same scenario. Again, you'd want to review it, tweak it, make sure it's fit for purpose before you push send, but it's a good way to jumpstart the content. The last bullet on the right, the natural language processing portion. Again, this is something that many of the telephony providers already have. Salesforce certainly has that through Service Cloud Voice, but being able to use sentiment across any sort of written or transcribed communications, like that's an entirely different data set that, again, 2-3 years ago, you couldn't get. You couldn't calculate sentiment of a caller in real time or near real time and factor that back. But being able to use that also in the predictive engine might give you insight into something where, say, somebody's been a really good producer, they've sold a bunch of stuff, but every time they talk with us, they're upset. Does that increase their likelihood for a trade? Probably should. Right? So being able to think about pulling that information into the predictive engine, again, there's value there. This is a slide I have on distribution management. Again, I'm going to pause and take a breath. Is this resonating? People have any additional questions around how AI may or may not be able to be used in distribution scenarios? Okay. In the event that I know we had at least one person here that was in direct distribution channel, you can do the same things. I'd swap out things like NIPR information and look at like website activity or like who's hitting the website for quoting, quick quotes, conversions, those sorts of things. But the same sort of tactics can be used in direct distribution as well. Okay, increasing underwriting profitability. Questions like, can we better identify risks associated with a single policy? Traditionally, and there's a philosophical question around the size of the risk cohort that we could have, but traditionally policies are priced based on likelihood or adherence back to a general cohort. So again, easy example, life insurance based on gender and age. Maybe if you're a smoker or not, it'll tell you what your average life expectancy should be with a confidence level. But as we start getting more information, we can start to shrink the cohort. As you get to scenarios where it's like almost like mass customization, building a policy for one person technically isn't really insurance. Like if you're not in a risk cohort, like you're saving for something, but it's not actually a shared risk model, right? So we can have that discussion, but generally speaking, we can go through and use some of the predictive capabilities to look at, are there variables in the cohort that are applicable to the individual? And so you can enrich the actual underwriting and pricing experience. The second question here is, can we optimize coverage mix at quote renewal? And so we'll hit on both of those here in a second. First predictive one I already touched on. The second one, we do have scenarios, and again, Salesforce has had some of this capability for the last 4 or 5 years to be able to go through and say, based on one type of quote, provide that quote, but also give them a couple of others to say, here's some other coverage mixes that may make sense. Typically that happens at time of quote. You can also use it inside of your underwriting team so that they can see, have the system suggest different coverage levels and potentially see if it makes sense to price those. And at renewal, if your policies are not like whole life that kind of run to the end of the person's life, when you get to renewal, you can also then have the system suggest back into your sales and underwriting teams for repricing additional coverages, whether adjacent or whatnot. Those are there. The one bullet that's, or kind of 2 words that are in that bullet that are a little out of place, is commission maximization. In some cases, we can say, here's a coverage mix that might be adjacent, but we might have a little bit more profitability, or we might find that they, based on actual claims activity, they're overinsured or underinsured. And so really taking more of it, how do we look at the coverage mix on behalf of the policyholder? We can do the same thing, especially in a non-captive channel, to say, how can we look at the coverage mix? Again, similar types of coverages, but to maximize commission. That's kind of a different use case, and there certainly are some ethical concerns if you go there, but the system can do that. The nice thing about it, if you are a non-captive and you are providing that service back to your agents or brokers, is that if you are actively suggesting adjusting the quotes to impact their take-home pay, they'll be more likely to be sticky with your organization versus somebody else. Agents talk and brokers talk to each other. They'll tell somebody else that this is there, and it may be one of the features that turns your organization almost into a selling magnet or recruiting magnet for additional distribution expansion. But again, that's an area where we have to be careful about, are we asking the system to suggest coverages that are completely not what the policyholder needs, only because we're trying to impact commissions. On the generative side, if we know what variables may impact the risk scoring coming out of the predictive portion, we can then create content that can adjust the behavior around the variables that can be affected. So we unpack that with like an actual example. In the health insurance space, for years and years, we've had premium relief if for most major carriers, if you go to the gym, 10 times a month or whatever. Like that is an example of the insurance carrier saying to you as the individual, change your behavior relative to the covered asset, in this case, this person, because it impacts our profitability or our underwriting profitability, but it's like behavioral engineering. The last few years, I think Progressive had a device you plug into a car and it would beep at you if you hit the brakes too hard, right? So and really they're doing that not because they want you to be a safer driver so that you don't have like emotional impact of having a claim in an accident, but because it impacts their underwriting risk and their underwriting profit. And so like if you lasso all that together, really starts to look at like behavioral engineering to impact the outcome for the organization. Here, if the system is able to identify things that are more obscure than, say, how often you slam on the brakes results in being rear-ended, the predictive engine can identify that. Somebody can look at it and say, yes, this is actual causation, not correlation. We don't have that octopus thing going on. Now, what sort of training material should we be creating and driving out to our policyholders or the people that interact with that covered asset in order to change the risk profile? So that is something that also can be done. We can generate recommended content to increase the profitability of optimal coverage mix. Again, both of these on the generative side have got more to do with like creating a nurture campaign to influence someone. So more on that education side. But again, tactics from AI that can impact some of these questions. Okay. Questions, comments on underwriting profitability? Okay. Anti-fraud and service, I've merged this in one slide just for real estate purposes. On the anti-fraud side, again, if you think about how most insurance organizations are structured, some of the claims systems, the admin systems will have anti-fraud detection in place. But because we have multiple admin systems or agency management systems and different carriers that we may work with from the distributor side, sometimes that information is fragmented. And so we can take predictive and say, if one policy has had a fraud activity or a potential fraud activity, what do we want to do with the other policies by the same policyholder across carrier or across policy admin systems or claim systems? Do we want to flag them for the users so they know that something's going on? Do we want to shut down the ability to take a claim on another policy? If we know where the fraud source was, like let's say that I went out to LinkedIn, Facebook, whatever, and just decided to type my password in the clear. Okay, maybe you want to go out, and if you know that that's where the cause is, we probably should be shutting down access to the rest of my policies. If it's something like a data breach, because my credit card company that I'm using to pay my policy premium with was impacted, you might want to go through and say, well, who else has the same credit card company, and flag those policies, right? So again, starting to use the predictive engine to determine what we should do across policies. On the service side, can we propagate successes and failures at scale in real time? You can read, again, this is a sentiment use case on the right-hand side, but traditionally in a call or service center, the manager can, periodically will drop in to given service interactions or sales interactions. But that's a one-on-one experience. Most of the time that people on the phone don't know that the manager hopped in and is auditing, but to a certain extent, that model has a scalability issue. The manager can really only audit one conversation at a time, or a limited number. If we're talking about text, they might have several screens up or conversations up at a time. But leveraging the natural language processing and putting reporting on top of the sentiment analysis, you can start to get a report to say, hey, every time Mike talks with somebody, the sentiment of the caller is higher. How do we go in and look at the conversation that's happening at that point where the sentiment spikes and harvest it for best practice to propagate to the rest of the team so they all emulate similar behaviors? Or conversely, let's say every time that Mike's on a call, you have the opposite happen, right? The sentiment drops. Well, that is a coaching behavior that you can go in and look and say, what's happening? You can look at multiple calls at the same time and see kind of where the sentiment drops and determine, like, is this a scenario where we have to take action? Still requires a person. We use a system for all of our meetings that does this, and went in and took a look at one of them because I exited a sales call really good. Everybody felt good. We had good solid action items, ready to move forward with the client to add value to them by doing a project. And when I looked at the sentiment analysis, there were some negative spots. And I was like, well, this is crazy. Like, I exited the call and it was really good. Turns out when I went back and looked at those specific spots in the call, we were talking about the local sports team and the fact that the executive at the client, her perspective on the city paying a bunch of tax money to build a new stadium had nothing to do with what we were talking about, right? So just because the report says that something happens, you still have to go in and verify and take a look at it. But it was interesting to go back and, it's insights that otherwise I wouldn't have been able to get based on what was going on. So good information, how you use it is a different topic. Okay. from a recommendations perspective, this is kind of the last slide before thank you, the obligatory thank you slide. Again, we would go back and argue that you should first take a look at where the business is headed. What are the KPIs you're trying to impact? Out 2, 3, 4 years, what's going on in your competitive set, and start from that vision and then back into what's going on. But that would really start to establish a directional roadmap. We do believe that as you're doing that, you should take a look at regulatory and reputation risks. That's something with most technology products you don't have to do, but here it is something that you should assess and make sure that at any given point, you're not turning something on that's going to result in a problem. Getting to an aligned roadmap takes time. There are a whole slew of easy, low-hanging fruit, low-risk use cases that can be turned on. Things like if you're hiring for a position, asking for one of the generative tools to create the initial draft of the job description. Can you draft an email? Got to be a little careful on the email side so you're not inadvertently like taking client data to a non-Salesforce or non-trusted source to do the generation. But again, that's something that's available now. Initial draft of a blog post. If that's relevant for you, that can happen. User stories. You can go to ChatGPT and ask it, give me the top 10 user stories for implementing Salesforce FSC in a financial services use case or an insurance carrier, and it will give you good user stories. You might be able to use 8 of them as written, and the last 2 you might have to modify, and there might be one in there you just delete altogether. But it will be a good jump start for what you're trying to do as you move forward. And so, again, easy, practical ways to access AI today in your businesses. If you want to get a sense for what competitors are doing with AI relative to a given use case, it's another good question to ask. It will tell you. You still have to filter it to see, is it relevant and whatnot. But it's a good additional asset to have. The next one is get your data in order. Because really the excitement around generative has driven much more engagement and purchasing around predictive, because a lot of the generative capabilities are based off of those predictions. The predictions require the data. So every time when you hear somebody in the ecosystem say, you want to get to AI, get your data in order, that's why. So as you think about that roadmap, based on what you have in the roadmap, what's the data sets that you need to move around, manipulate, join, merge, split, whatever, and get that prioritized and move forward. The next one, avoid implementing AI for non-AI use cases. Like that underwriting one is a really good example. We've implemented automated underwriting for all sorts of clients, straight through underwriting, using if-then statements for years. Using an AI engine to do it without any person or any if-then in place is eventually will end up causing a problem. The workflow on the SOP side, that's another example. Using AI to generate your policy documents, right? There's spots in here where you want to try to avoid those use cases. And the recommendation that sits underneath it is establish a decision tree so that as you're going through your IT projects, you kind of know when to use it, which piece, and when you should avoid it. But if you have that decision tree ahead of time, it'll help guide and prevent a project from getting partway down the path and having to unwind and rebuild, or worse, go live and then have either a customer or a regulatory impact. And then the last one, again, ChatGPT, the generative space didn't exist 12 to 18 months ago. What we're seeing in the AI space is that these leaps in capability are accelerating, they're not decelerating. So continue to monitor and assess the space, because 12 months from now, 6 months from now, we're going to be talking about something else. It's not going to be, we'll still be talking about generative, but somebody will invent a new capability that will be the discussion of the time. So you want to make sure that it's something that you're continuing to pay attention to. If you recall all the way back up to the stock market graph, the promise that AI holds is that upper curve. It's just we need to think about how does it apply to our business, different business models in insurance, and be able to understand how to drop it in and leverage it. But there's a huge amount of value that's here. Okay. With that, to the thank you slide. We still have about 3 minutes left. Are there any questions, comments that exist? If nobody wants to say anything, I'll ask for again, we can just use the emoji because we do have enough people on here. This is feeling a little bit more like a webinar than a community meeting. But if this was valuable, if we get just a thumbs up from the emoji perspective, that'd be helpful. Just so we get a sense for impact across our audience here.
Our group tends to be quiet at times, as I'd mentioned when we first started the call, but I think that everybody likes to absorb all the information in and then come back for questions and things.
Yep. Certainly, if there are questions or comments, my contact information's in the deck. This will be in the recording. Christian posted it here in the chat. Certainly feel free to reach out. I'm happy to engage and just have a conversation around insurance and what we're seeing in the AI space.
Awesome. Thank you so much. That was incredibly insightful. I think the particular areas in which the use cases are involved, it was very helpful, and definitely something that I'm seeing on a regular basis as well. So thanks for the insights.
Absolutely.
I'm curious on your decision tree. Do you have one of those? Has anyone else created one of those? Anyone even thought through that at all from a decision tree perspective of like when you do use and when you don't use? Like, has anyone sat down with a lucid chart and actually created that?
We've done it from a coaching perspective a few times, Danielle.
Yeah.
And it's really the real value to that is when you have a client that is talking about like AI can do everything. It's sliced bread 3 times from Sunday, right?
Yeah.
Being able to say like, if you want that outcome, we can still do that. Like it's not a no, you can't make the system do something. It's a use a different tactic, right? The example of the workflow capability, right? Using generative to try to figure out like how to route cases, technically you can do it. As I've said here, it's eventually it's going to be a bad idea because you'll end up ingraining the neural net so much. But we can still use flow. We can still use case route, like, right? So we'll go through and lay that sort of thing out. But it's really to help the executives and whatnot make good decisions about what they're doing and how they're building it.
Yeah, that makes sense. Awesome. Well, we are at time. I appreciate everyone so much for sticking through for our little early lunch and learn this time. We typically do it over lunch, but I was afraid with summer Fridays that we might lose people at lunchtime. So appreciate everyone who is here today. Thank you again, Mike, for all the insights. This was fantastic. This will be posted on our YouTube channel. I'll make sure it all gets shared out. So if you guys want to reference back to it in any way, shape, or form, you are welcome to. Please feel free to reach out to Mike or anyone else, Monica, myself, if you guys have any additional questions. And yeah, I'll let people go and enjoy their weekend now. So thank you.
Thank you very much. Have a good weekend.
Thank you.